Welcome everyone to the Kendall Report. Remember to subscribe, like, and share these videos. Sorry I'm a few minutes late, had some technology issues, but I do have another announcement. As you know, there's a broadcast tonight and tomorrow night, and that's it for the week. I'll be traveling. So just remember that. Also, this is going to be the final week that the market grid is going to be posted on the website. So if you're a subscriber to Wavetech or PortfolioXpert, please reach out to us. You'll have the indicator available on the trading view, so you can see on any stock, any instrument you want. And it's just, that's been manually posted, so that's going to stop now that we have the market grid out there. So make sure you send us an email and let us know you need access. And I would suggest also to get the one-time fee for the indicators as well. So anyway, with that being said, yesterday was sort of an interesting day. It was fairly quiet. In the live room yesterday, we focused on just setting up trades, utilizing some of the tools that are available in the Wavetech toolbox, and pretty much did that all day. Market was selling off into the close with about 15, 18 minutes to go. We caught a bid. Market went vertical, basically traded, I believe, by the time going past the close of the cash, went up about 34 handles off of that low. So, and it was a moonshot. It was straight up. And it was very interesting. But S&P finished unchanged, NASDAQ down 0.1, and the Russell down 0.7. They were all down maybe 0.25, a little worse on the NASDAQ for a while. There's really nothing to talk about as far as the news goes out. I would just say, I said last night that the banks are going to miss. Well, Bank of America didn't miss. They came in with some pretty good earnings. They also talked about a more optimistic view going forward, but that's what they're supposed to do, right? What are you going to say? Well, I think business is going to be terrible, so my stock will go down. Of course, you're not going to say that. So, the markets really didn't care much about that. I don't believe that had really any influence. A little bit of a bid early in the session, a fade, and then a rebound with just a few minutes to go, as I said. I think the one thing that was interesting was some of the comments out of our good buddies over at the Fed, and specifically Bullard. And Bullard is the hatchet man, right? They send him out, let's go out and shake up the market. Let's say a bunch of stuff and test it out in the market and see how it would go. Well, Bullard made a comment about the balance sheet, using the balance sheet and some other tools that weren't working as a plan B. I thought that was somewhat interesting, and listening to that, because what's plan A, okay? And whatever plan A is actually has been working to a bit, and I think they've always, I'm kind of shocked at the balance sheet comment, because I thought that's what they always did. I mean, especially when you have, this massive $1 trillion balance sheet that they have, you can move assets around. And I've talked about this before. All they have to do is when they're buying, they can buy or sell different assets to make this yield curve magic happen. And so they obviously don't want to signal to the market that there's a recession coming, which is also weird, right? Because the only way they're going to get inflation under control is most likely through a recession. So it's getting more and more interesting. I just wondered, if plan B is the balance sheet, what's plan A? Is plan A working? And what's really going on here? And I think they're just trying to draw a bone. And like I said, Bullard's just a hatchet man. Send him out, shake it up, and see what comes out of this whole pattern here from that standpoint. So there's not a lot to go through tonight, so we're going to be fairly quick getting through this. Once again, apologize for getting a few minutes late start, and it was because of the old posting of the market grid. I had some issues with the technology getting that posted. So like I said, just to remind you, is this will be the final week for market grid being posted in the PortfolioXpert website. From this point forward, you'll just bring it up in TradingView and get all your information right there. Let's go ahead and take a look at the database. So interesting stuff. We had 2,023 sell signals for the morning on Tuesday, 282 buy signals, and the database now has dropped down to 37.46% bullish. So we're well underneath this 42% level that I talk about all the time. We're really continuing just to lose traction here, even when the market is unchanged. And I'll just come up for a minute because there's not a lot to talk about with this rotation, but I suspect we could see a continuation of this backdrop of the deterioration of any kind of signals at all. As I talked about in last night's video, our intermediate database is down to 15%, and it just isn't getting any traction whatsoever. So let's go ahead and dig into the indices, and we should be able to get through the broadcast fairly quickly tonight. So first market we'll look at here is the S&P. One of the things that is probably the feature here at the moment is we're just hovering just above or a little bit below the 40-day moving average here. Let me bring this up on the screen. You'll see here that the last several days we've really just been whipsawing back and forth, and yesterday was the first day, we'll just call it flat. It wasn't up or down, but the previous 5 sessions we were down then up and just flip-flopping. But every time we've been closing right at or near the 40-period moving average. 43.92 is where the 40-day average is, 91, 90, and it just kind of stays right there, 91, 92, and now today it's 43.95, so it actually upticked, and you'll see this on the PPM 3 here, and it is ticking up and starting to accelerate. So the 40 is turning up, which is a bit of a positive sign. We're at a 0.06, so we're not in trend mode, but sometimes the 40 will lead the way here on a crossover, but I think the most that you could expect would be to trade back up, possibly toward the 10-period moving average, and that's 44.72. And there's going to be a ton of resistance up here. And then once again, we're really just in this choppy sideways range. Even though we're losing traction on the database, we're not seeing any downward acceleration, but I wouldn't be surprised, depending on how we trade over the next couple sessions, that we don't see volatility kick up, maybe coming into Wednesday. And like I said last night, I will do my best to make sure that you are set up, as I'm not going to be here the rest of the week. So I'll do my best to set up the weekly pattern as we come into tomorrow night's broadcast. I'll spend a little bit more time on that. So next market we'll talk about is the NASDAQ. Kind of a bit of inverse of what I just talked to you about on the S&P. We're actually trading below it. We've been staying above it on the S&P. On the NASDAQ, we're just below it. This NASDAQ futures, the 40 is right at 14,182, and it's been right in that 79.85 level, so it's right there. But just like with the S&P, we're starting to turn up a little bit, but we're going to need to get closes above there. And this is going to be a bit difficult just because we have if we look at the market grid is suggesting that R2 1481, R3 is 14,172, which is basically the 40, and RXT is 14,584. And so we're just not seeing any acceleration except for a little bit on the 40, but we're going to have to get above that. But then there's major resistance right here because the PPM 1 is at minus 0.84. That is big time trend down, and that moving average is at 14,212. That's going to be your ceiling here. So we're probably going to bump up against that, but everything's still pointing to a slight bias to the downside in spite of this, both on the S&P and the NASDAQ. Next, we'll look at the Russell. The Russell is also seeing a little more acceleration. We're starting to roll over. We did not get the same configuration on the ppm 3 as we are in the NASDAQ. It did uptick, but we're not taking out that second derivative here. We're just seeing further deterioration. Talked about the sideways range last night. Nothing's really changed there. We are seeing a contraction of the market grid, which suggests that we will most likely continue to the downside. Upside resistance right now is at the 2050, 2015 level is the first resistance, then 2050, 2027. There's a lot of stuff above there. Now there is a Fibonacci sequence being signaled above here. I don't put much merit in it right now. We'd have to see ppm1 get back positive. It's minus 0.50, so it's in trend mode down. So that resistance at that 2015 level is going to be substantial, and I would look for a rejection anywhere around that price. So don't go getting too optimistic here yet on the Russell. And like I said and been talking about, we've really been in a sideways range going all the way back to the beginning of the year, actually. So the next market we'll talk about is the Treasuries. We're looking at Treasuries continuing. We did get an RXT sell signal yesterday. That was at close 2.82. We actually closed a little bit higher. We're at 2.86, almost 2.87. I still expect to see that just stay in a range. We're not getting any real acceleration here, but the upside is still targeted for 313 to 325, which is a retest on the taper tantrum highs that we had back in 2018. And I do see a comment here about looking at some of the commodity prices. I won't do that tonight, but if you remind me tomorrow night, I'll definitely go through that. Especially we're seeing stuff going on in nat gas and some other areas. So I'll go through that tomorrow night. Let's take a quick look at the yield curve. Yield curve is managing to continue to expand or to steepen. And we're at 0.15, we're at 0.13 yesterday. No big deal. But like I said, we're not inverted. And the fact that we're not inverted tells you that the Fed is actually doing something. So maybe plan A is working. But like I said, I send Bullard, the hitman, out just to see if he can shake up the markets. There was minimal impact on any of his comments yesterday. But it's pretty obvious, I think, that the Fed needs this yield curve to steepen, and they need it not to be inverted just to keep all of that rhetoric off the street. Because really what we're talking about happening here is that it affects market sentiment, and they just don't want folks thinking about recession any more than they want to talk about the other word, the inflation word. They don't want that to be talked about. So they're trying to keep market sentiment in check just through jawboning in the market. They've been doing it since I've been around in 1979. Nothing's changed. Probably Greenspan was probably one of the best at it, and Paul Volcker was just a hawk. He just went in and did things, and he was a bull in the china shop. But Volcker was a little more tactful, especially with words. He used to make up a lot of words, and then we know all about Helicopter Ben and Grandma Yellen and all that stuff. We know that, and Powell's probably the weakest Fed that I've seen, and I go all the way back to Arthur Burns. I've watched all these guys. Powell's just the worst as far as having any way to really have any credibility. They continue to lose their credibility, like not that they even had any in the last couple of years, but this is a disaster happening. And I've talked about this before. I won't go through a whole rant about trashing our government, the people running it, but we have a lot of very weak people that aren't doing their jobs, and it's really affecting all of us, and we're seeing it across the board in the economy and inflation and all of that. As I mentioned, I actually had the opportunity to pay $40 a pound for prime beef, and it was top-end beef, but still, it was absolutely crazy. That price was probably 24, 26, 6 months ago. That's how much, almost doubling of prices just in the last 6 months. So we all know that, and I'll go through the commodities. I'll try to get a nice setup, and maybe that'll be the feature for the final video for the week, since I'm going to be gone for the rest of the week. Okay, next market we'll cover is crude oil. Crude is back at 107.65. I was talking about this 109 level. We printed 109.20 yesterday. So we did get up there. There's something else that happened is we got some new Fibonacci projections here, and that is for a 116, 126, 131. So these old objectives up here at let's see what that number is again, 134 have been negated. There's new patterns, and this is basically talking about and projecting a retest of the highs. PPMs are in trend mode across the board. Angle of attack is starting to come into play. We should stay at worst case, we should stay above the 101 level now that we're back up here, and it's possible to see an acceleration start to move back up toward this 116 plus level. But most likely we're going to stay 110. I'm going to round it up. It was 109, 110 to 100 right now is going to be the range, and that's going to continue to propel the energy stocks forward. We went through in the live room yesterday looking at XLE and just looking at some ETFs. I mean, these are going to continue. I think the energy play is just going to continue to extend. This goes out for me all the way back to November and December of 20. That's when I was first telling you folks that energy, financial were going to be the two places to focus. Energy's still in play. This is one of the longest sequences that I've seen for a very long time as far as the trend goes, and I don't see it ending right now. Like I said, I'll go over the commodities tomorrow night. We'll bring in maybe a more detailed view of that stuff. So tomorrow's video will be a little bit longer, setting up for the end of the week, as well as going through some of these other items here. Let's take a quick look at the weekly. And weekly pattern, and this was what I've been talking about, this rising 10-week moving average. That's now at 102.55, so that's probably going to represent pretty close to the bottom. That's also S1, which is 103.10, so we're looking at S1. Possibility of getting up to R2, which would push us up to 113 toward that new objective I just showed you on the daily chart, so which is 116. So 113, 116 looks like the upward range that we should expect. So next market we'll look at is gold. Gold continues to climb. We're down a little bit right now, but it's still, this is the weekly chart riding along this slope. It looks very similar to the crude oil actually. And we're seeing PPM2 start to accelerate here. And this is, like I said, weekly. So this is very positive. So this angle of attack that I talked to you folks a lot about, I'm just going to draw this in very quickly, just so you can remember, in case you forgot. But these angles here This is the angle of the moving averages, and this is the slope of the trend that we're dealing with. And this is very robust. We're at 0.69, 0.47, 0.20 on ppm 1, 2, and 3 on the intermediate. So these are likely to remain in place. So you can see we're going to keep moving things up toward the 2,000 plus level. We actually were able to trade above 2,000, and that is something we want to keep an eye on. But I think ultimately, as I've been telling you, we're going to get some bigger numbers on the upside. Let's take a quick look at the daily just to get a feel for what that looks like. Daily is stalling a little bit, but we're still in 0.24, port 1, 1958, and that number is going up at about $5 per day, so 160. So any moves back into 165, 160 is going to be an opportunity to add to positions if you're playing this market. And we're not in a robust acceleration on a short-term level, but the weekly is definitely in big time upward trend on an intermediate level. Next market we'll look at is Bitcoin. We've managed just to continue to stay sideways. This is a daily Bitcoin. The range 38.5. We got down to the 38,589 was STX for today. So the high right now is 41,260. The RXT is 41,050. So we have completely worked that entire range from high to low in the last 24 hours. This will update. So those of you that have the market grid now will be able to get the updates real time when they come if you're trading crypto or any other market as far as that goes. So there'll always be this new update as soon as we get the update, depending on how you have your clock set for and what exchanges you're using. But let's go to the weekly chart. Weekly chart still got some overhead resistance at the 42.6 level. So we've traded up to 40, just about to 41. We're 47.30. So I would look for still resistance here. But once again, I think it's amazing that what we're seeing in Bitcoin is just a very stable market. We can go back, this is weekly, so we can go back a couple months, and we've just been waffling in that sideways range. There's still an upward Fibonacci projection for a 62 to 80 range. The 62 would be basically a retest of the 68 highs that we had some months ago. But the pattern just keeps unfolding in a very methodical sideways range. So I would be surprised, I guess I'm going to correlate this, that if we are going to see that type of move, I would suspect that this is a risk-on move. So there's something that would have to happen in the equity markets, but I don't see that right now. We could just really just stay stable as far as that goes. We're just not at that inflection point to expect to see the crypto move at any basis from this point. So this is going to do the end of the broadcast. I appreciate you coming and watch. Sorry for a little bit of a late start, but this will set us up. Tomorrow night I will go through the commodities. We'll look at the grains and other things. I'll just put a whole commodity list together. If you make comments in after the video repost, tell me what you'd like to see me cover. I'll go through a little more detail tomorrow night. That'll be the final video for the week. So once again, thanks for watching. Appreciate you coming, and I will see you tomorrow night.